Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. We're going to take a look at our Bitcoin video from July 19th, just a couple days ago, and play a little game called Let's Play Told You So. Once a week we take a look at an old video. It's not financial advice. I'm not your advisor. No, I just want you to see the TA is fucking awesome. So here we got from July 19th. Let's get it rolling.
But again, we have to keep in mind that we've been treating this green support as essentially like the floor this entire time. That's our entire time from back in May. So right now, that as a support is much stronger than this as a resistance, and it's exponentially much stronger than this as a resistance. So you'll see it was easy to float right out of that. Now this blue horizontal, it's easy for us to operate on top of it for this whole range. Then we operate under it for this whole range. Then we operate on top of it for this whole range. But you see we're just getting squeezed closer and closer to it. And now here we are back on the bottom. And all we're doing is just putting in a series of triangles and then breaking through. So we basically put like a descending triangle and then we put like an ascending triangle. So now we break up to the upside here, and it's just a lower portion of that same triangle we've been operating in. We didn't break through anything long term, and we're essentially just consolidating inside that same range. And that's what you expect to happen for the longest period of time. And then finally, when no one's looking, no one's paying attention, that's when the breakout happens. And it usually happens in the opposite direction of what everyone's expecting. So right now, everyone is expecting it to go to the downside. I expect it to go to the upside, to the top of the range right here, and then we could potentially get like a fake out outside of this and like get enough action to push us down. Now it is possible the floor just drops out from under us and like, it's just that distribution taking place. But at this point in time, I'm looking for confirmation and continuation over wicks and consolidation, because that's what we've been getting. We've been getting wicks and then consolidation, wick, consolidation, wick, consolidation. It's like the same thing over and over again. I would rather see a range break and then see continuation, a range break and then see continuation, break, continuation. So if I'm going to see one of these things break right now, I'm looking for continuation on at least a 4-hour, if not like 12-hour daily, something longer time frame. But the fact is, at this point in time, indicators and oscillators are almost completely unreliable, because when you've been consolidating for this amount of time, everything is just going sideways and everything is just coiling up, waiting for that move. And then typically, whatever move happens, if you're watching these charts on a daily basis or hourly basis or all day, you're way ahead of the move. Like, you see the move happen and you're like, oh, I missed it, we broke out. And then like no one else has even noticed yet. I mean, I don't mean no one, but the majority of people don't even see a move, for hours, days, week, months, sometimes the bull run's completely over before people start paying attention. So after this long of a consolidation pattern at the top of a range and potential like distribution, or we break to the upside and start taking out this, we start jumping over the creek and then break to the upside and get like the actual move continuation, which is potentially like a higher probability at this point in time. Everyone is extremely bearish on this asset. It's been consolidating the whole time while everything else pumped. So is it unrealistic to think that all of a sudden Bitcoin could break out to the upside and pump and do what it's supposed to do? I mean, fundamentally, no, and also technically, no. I think it's possible that, everyone has gotten bearish at the absolute wrong time. I'm not ruling it out, but, everyone is comparing this to that breakdown from 6,000 again, and there's some similarities, but this isn't the same thing. This isn't a clearly defined descending triangle. We haven't been putting in a floor for like month after month after month on a flat bottom. This is not the same thing. So I don't want people to get overly bearish right now and start dumping their cryptos because, people have said this is the top and that's it. Like, do you. Don't just believe what some guy tells you on the internet.
Yeah, so the measured move for the breakout of the pattern, as you can see with the blue arrow right here, comes in at 10,150, which would basically just be the measured move of like the channel consolidation pattern up to the top, assuming this is in fact Wyckoff accumulation pattern, or potentially could develop into distribution. So but I just wanted to bring that one back up here. As you can see, essentially we got that measure move. I had to redo my chart because TradingView deleted it. As you can see, we got the measure move up to the top of the range, which was, I had it at 10,150. So it was the exact measure move. I was thinking it went a little higher to 10.2, but yeah, so we basically just got the measure move of the consolidation channel pattern as predicted at the exact point of the break, retested the parabolic trend lines, the white one and the yellow one, and if we can maintain back inside of the white area right here and continue, I think we could potentially get continuation to the upside. But once again, in my opinion, I think this move is done. We already got the measure move that I was expecting, so any further move continuation is possible, but it's better to just sit back and wait for the next move to play out. I did miss out on some of these profits right here, as I was not overly exuberant to get involved in any trade in this range, as I discussed in my previous video. But I did want to just touch base on that and just kind of point out that we are still operating inside of this yellow channel right here with the blue and purple crosses, and this cross right here, I would expect some sort of continuation into the range here, and then finally like a smaller consolidation and then a failure breakout to the bottom, as I am still at this point in time expecting downside movement. And this is the exact situation that we were speaking about before. Essentially, the green horizontal trend line right here for candle closes, but any of these wicks right here for obviously like corresponding wick. But that was like the exact area that we were talking about. We essentially needed to break above before we could give like any validity to this pattern. And once again, everyone has gotten extremely excited over this daily candle right here. But in all reality, like proportionately, I think if we look at that compared to like all the other candles on the chart, it's not even that big of a move. It's just the fact that we've been going sideways for so long and there's been so much volatility in all these other markets that it seems like this like massive move. And then not to mention, like obviously it's still very early, but half of the candle has already sold off. And not to mention it's Sunday, so essentially like we could just be filling the gap based on like price action, previous gap that we had like left behind. I mean there's a lot of stuff that could be happening right now. I don't think necessarily that this is going to give us any resolution, as we had discussed previously, that all this would be is just essentially like another test to that same zone. And even if we got something like this, I would have to see continuation before I would take it seriously, because everybody thought this was a breakout and then immediately just sold back off. So what I'm looking for to happen is like essentially like a breakout and then like consolidation at that range, retest the resistance as support, and then continuation to the upside. Otherwise, what I'm expecting to happen right now is, this to essentially act as the ceiling, a little poke up out just to see what's going on, but the ceiling. I mean, so again, we'll have to see. And this is what we've been talking about, basically like a stop and reverse point or a pivot on the market. Potentially when you get something like this and you're consolidating at the top of the range, one of two things is going to happen. The range will hold and will sell back off and it failed to break out, or the range breaks out and it finally happens and then we get continuation to the upside. So when you're at a position like this, if you're not already positioned for the move, you better to wait till the move happens, wait for confirmation, and then jump in for the follow through, assuming it's going to be like a long trending move. So again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. I don't really show off TD sequential that often, but as you can see, I'd like to take a look at it here and there. As you can see, we got like the consolidation range to 9 here, and then we're now getting 8 candle range up. So essentially what this is saying is that the Monday candle would not take out the low of this right here. So it's saying Monday's candle is not going to come down below 9,700. We'll get the 9th candle, essentially represents like the trending move. So it'd be like 9 in a row and then 9 in a row, and then you'll usually get like a 4 in between there, followed by like another 9. I mean, it's essentially just looking for basically like exhaustion in trend, and we're on 8 right now. So but if you look at the TJD Fisher, the Fisher had you taking the buy down here, accumulating at 9,200 for this up move. And then the TJD Stoch slope, people ask me all the time what's a good indicator to use or whatever. The purpose of the TJD Stoch slope is to literally create the absolute most simplified indicator possible, to where you could literally just say, if it's blue, I'm going to take the long. If it's red, I'm going to take the short. Now, it's not 100% like everything, but all it does is essentially turns your 2 stochastics lines into a single line and then just changes color with the slope. So if the Stochs are crossed and headed to the upside, it will be blue. If they're crossed and headed to the downside, it will be red. And that's literally all it does. So if you look at like a long trending market, like we switch over to like a weekly or something like that, when this puts you in a trade, it puts you in a trade like for a long time, but it's going to be like a little slower, like reactive basically. But you'll see overall, you know, in a consolidation area like this, it's not going to be as effective, but in long trending moves, it's extremely effective. And right now it has us in on the weekly for a sell at the top of the distribution zone. So we could still see a little more continuation to the upside, a fake out where it flips back blue at the top of the range and then sells back off. But again, I mean, you guys know how I feel in this range and what I'm expecting to happen. You know, we're at a very strong resistance point. If you take the total amount of time we have spent above the resistance point that we're at over Bitcoin's, like, you know, whatever it is at this point in time, like 11 years basically, you know, you're looking at like a blip on the radar. So if we can get back above there and consolidate, you know, something like this, and then potentially find support and get like the move to the upside, you know, at that point in time, it's very likely that we're going to come up here and at least retest the all-time high. And as you can see in like all other markets, basically every other asset in existence except for crypto, basically like testing all-time highs. Traditional markets overall, all-time highs. Well, index fund-wise, gold to pretty much any currency. But then you have things like silver that's still at like 40% of its all-time high. Then you have things like, you know, cryptos that are still at 20% of their all-time highs. You have a lot of the traditional stock market companies that are extremely low, but because they're part of like an index fund or whatever, they're doing well. And you know what? I don't really want to get into a ton of traditional in this video, but I do want to talk about that really quick. I was looking at something the other day, and it really made me think, because everybody looks at like index funds and you know, like just basket investments and stuff like that. And if you take out like the MAGA stocks and Tesla, and I mean like Microsoft, Apple, Google, Amazon, and Tesla, if you take out those 6 stocks, I think those 6 are up like 35% or something like that, like on average. But or maybe the whole stock market's up 35% on it. No, I think those 6 stocks are up 35% total. But the actual stock market is actually like down like 5% without those stocks in it. So essentially, you have those 5 or 6 stocks are essentially carrying the entire stock market and giving this like false hope, essentially that you know, that the stock market is doing much better than it is. Because of course there are some companies that are still going to be doing great based on like their balance sheets or business plan or whatever industry they're in or whatever. But then there's like, for every one company there is that's doing good, there's like 999 that are probably like hanging on by like the skin of their teeth. So I just want to point that out. And again, you know, you guys all know how I feel about this, that we're basically at the top of a bubble. I've seen these cycles play out multiple times. It doesn't mean that the strongest can't go on for a couple more months and double, triple, quadruple in price. It does not mean that for 1 second. Because what happens is, say you start with like, just for an even number, say you start with $1 million. So when the market sold off, there was $1 million sitting on the sideline. So like, say like 750,000 of that rushes back in, and then like all that money switches to like Tesla as it goes on a run. Well, not all the money switches over. Maybe like only 500,000 goes in, and then Apple starts going on a run. So that 500,000 switches over from Tesla into Apple, but this time it's only $350,000. But every time it's a little less, and it's because people are keeping some on the sidelines, or they're keeping some in the asset that they just like bet on last or whatever. But the fact of the matter is like, the little bag gets like smaller and smaller and smaller every time as it moves around between all these currencies. And then finally, like when the last pump has happened and the last, like, you know, of the exuberance like happens, then all of a sudden there's nothing left and it starts selling off. So we'll start seeing other stocks start doing that. In the meantime, start like dumping off like that as the money comes out of them, and people realize like, wait, I don't want to get stuck with a bag of this. But you're not going to see like the true crash until the biggest ones and the top money decides like, okay, that's enough. Because essentially what happens is, it's like that musical chairs where, you know, each time the music stops, there's like one less chair. And that's how it is just with like companies and with money. You know, every week that goes by, you know, and nothing changes for the positive as far as like the world economics and everything, like one more company is just going to go under. A little less money is just going to get traded, a little less like excitement, a little less confidence in the markets, and then slowly and slowly and slowly we see it wane, and then finally it's enough that, you know, it's not going to make up the difference. And you know, at some point in time, and you already kind of see it happening right now, at some point in time the government's going to decide like, all right, we can't just keep printing money forever. And essentially what that means is they're like, okay, I've got enough, like this is getting like kind of ridiculous. But you know, they're like, all right, our pockets are already full, so everybody's good now. And that's when you see it kind of happening. And because we believe in trickle down economics and everything, and like that's the basis of our system, they figure like, oh, their pockets are full, their vaults are full, their banks are loaded, like they're good now. So they figure everybody's like that. But the fact of the matter is they just put all this money like on the sidelines, fill up their pockets, fill up their accounts, all this stuff, but they're not spending it into the economy. They're not moving it. It's not getting like the revolutions, you know, the way that money needs to like fuel the economy. So essentially what happens is that's just like dead money sitting around. So then once the collapse does happen and there's no more like money circulating and all the asset prices are down super low and the crash has happened and the depression's been going on, then is when, you know, they're able to use all that money essentially to like operating costs and stay in the business or stay in, you know, the markets or whatever. And then they can flood in at the bottom and buy everything up super cheap. And that's essentially like the transfer of wealth into like, you know, the top people's pockets. Because essentially what's going to happen is even if the stock market just continue to go up and everything, if people don't have jobs and people don't have steady income and people don't have like consistency in their lives, eventually they have to pull that money out of the market because they need it for like living costs, operating costs, like expenses, bills, you know, and it's not like back in the day where you could just buy a bunch of stocks and sit back on the dividend and use that, because most of these stocks now have like stopped paying their dividend. So at some point in time, people are going to have to start actually pulling money out of the stock market. And then when you couple that with like, you know, essentially like the tax holiday or whatever, it's going to incentivize people, especially if you're like already old and you basically are at this point now where you have a once in a lifetime opportunity to take money out of, you know, these accounts without paying taxes on them. Of course you're going to take that opportunity, at least for some portion of it. So like I said, I think that's going to be like the final catalyst. But as we approach like the American election and everything, as we get closer and like the tensions fuel and everything starts getting crazier, you know, they're going to try to send out like another stimulus check and get people excited. They're going to try to like lay more money into people's pockets. They're going to try to do all this stuff and, you know, make everybody think it's all getting better. But like the truth of the matter is like, you know, people are seeing all this optimism and seeing all this money being printed and seeing like, you know, everybody say like, oh yeah, things are going great, stock market's doing great. But like eventually like people stop like believing it. They start looking around and seeing like, wait a minute, nobody's coming into my job anymore. Like my hours are cut. Like I'm getting laid off. My wife lost her job. You know, my kids lost their job. Their school's not reopening. Like you cannot just keep tricking people and them just believing like they're not just going to keep drinking the Kool-Aid that everything's fine and going back to normal. Like, you know, the fact of the matter is regardless of the pandemic and everything going on, like we now have a whole nother issue to deal with. We have a economy that has crashed and is absolutely being ravaged right now from the inside. And the longer we take to fix it and get it back, you know, moving, the harder it's going to take. And the fact of the matter is, at this point in time, you know, most of it probably will never reopen, and we probably are better off at this point in time, like starting over and rebuilding our country from the inside. So, you know, maybe that's like the big plan, is to pull all the funding back, build the infrastructure of the United States, start building factories again, you know, start focusing on renewable energy. But that's probably just all a little too optimistic. And I think more realistically what's going to happen is, you know, the old cronies in politics and business and in governments are going to do what they're best at, and they're going to vampire as much blood out of the economy and the people and you know, the living masses as they can indiscriminately until they've sucked everything dry, and then you know, they'll just step back and let it all fall down. So this point in time, you guys know how I feel about this whole situation. These markets are looking absolutely horrendous. This is a full-on melt up. This is a full-on bubble, and I expect a full-on bubble pop scenario. Now, like I said, does that mean that we can't just continue to float to the upside? No, not at all. And the fact of the matter is as this money becomes more concentrated into fewer and fewer assets, and you start seeing like a couple of them just mooning and taking off like a rocket ship, those ones are just going to keep staying strong because everybody's just going to flood into those ones as everything else fails, and they look for places to put their money. But when those ones finally do collapse, those are the ones that leave you with those 30-year bags. And if you don't know what I'm talking about when I say 30-year bags, study the Japanese economy and the stock market crash. 30 years ago, and 30 years of stagnating economy. And basically, if you look at and this is nothing against Japan whatsoever, like the culture, the people, anything like that. I'm using this specifically as like a monetary example based on like economics and modern monetary theory and all that stuff. Basically, they're just a gigantic failed experiment for what we're doing right now. They're like the 30-year older brother of us. If we don't make better decisions, we will end up in the same position economically as Japan is in now, with a stock market that is 30 years from its all-time high. 30 years ago it made an all-time high and has not gone back to there. In the entire economy, everything is just stagnation, creativity. Like it's just absolutely horrendous for what was at one point in time one of the most technologically advanced emerging cultures. So, and with that, again, this is nothing against Japan whatsoever. I love the people, I love the culture, all that good stuff. But I'm just using them as a specific example because, if you got that older brother who went to prison for doing dumb stuff and you're the little brother, the likelihood is one of two things. You're either going to repeat in his footsteps and do the same thing, or you're going to learn from his mistakes, not make them yourself, and end up in a better place. And I'm just hoping that America can be the smart little brother that learns from the older brother's mistakes and doesn't have to repeat the same path. So there you have it, guys. Crypto Trend Trader went on a little longer than I expected and a longer rant than I expected, but you know what it is. Crypto Trend Trader, and I'm out of here.